Good morning. Today is Thursday, October 20th. The time right now is 9:39 in the morning in Singapore. And overnight on Wall Street, the market was pretty tame. There's no new high traded for the week. Market, in fact, actually have a technical pullback. The high traded on Tuesday on the Dow Jones was 30,837.9. And last night we have a three-wave pullback on the 60 minutes time frame. You can see the market is basically relatively firm, and it has not yet completed to its ideal target for a three-wave rebound. So technically, we would love to see the market go back to 31,400 levels to complete this equality move of what ABC move. Okay, ideally that should be the that would be ideal, and from there onwards we will see whether the market can sustain itself. If not, then possibly a top could be there, and then we may see the equities coming back down again. Okay, for the time being, I think this underpinning reason is because right now we are in the midst of the third quarter earnings report from the various US companies, and last night we have various companies releasing their earnings. It wasn't spectacular, but it wasn't disastrous as well. So the market basically was hanging up there, waiting for new impetus. On the other hand, we have the CPI reports coming out from UK, and the CPI numbers has gone back to the 40 years high. Now remember, 3 months ago we saw that the CPI numbers in the UK was at 10.1%, a 40 years high, and then it crept back down to 9.9% the month before last, and then for the latest number for the month of September, we saw that the CPI numbers has come back to 10.1%, again back to 40 years high. So basically that is the only other major news that was released overnight. But again, that did not cause the market to go into a wild swing. So temporarily, I still maintain a slightly biased to the upside look for US equity index. Over in the S&P 500, likewise, we have a three-wave rally, but this three-wave rally have not hit its target. The ideal target will be 3,800 points. The highest traded on Tuesday was 3,762.8, and we can see that last time we have a three-wave, very small three-wave pullback in the 60 minutes time frame, and that could be setting the stage for another upside move, ideally to challenge the October 6 high at 3,806. Okay, so basically I think this is currently market is building up for a maybe extended relay back to 3,008 levels. Okay, over in the Nasdaq 100, we can see that the market has almost hit its ideal target. We have a three-wave rally. The market went up to very close to the ideal target of 11,389, and we can see that although it is only high traded this week on Tuesday at 11,374.4, but it was pretty close. Okay, in fact, it is the closest among the three major equity index that are tracked. Okay, so does it mean that the market has completed its three-wave rally and should be poised to come back down? The fact that the other two indices has not hit its ideal target, that means it leaves room for another burst. Possibly what we can see is either a more complex corrective pattern, or maybe we have a double zigzag, meaning to say we have another set of three-wave rally. And if that's the case, maybe we have to redefine where the low is for this round, and then take another reading for another possible three-wave rally. Okay, so basically do not sell at this current point in time. I have currently no position in US equity index. Okay, over in Asia itself, we can see that the market actually came off. Earlier on, and when I take a look, the Hang Seng was still not open yet. Now we can see the Hang Seng index actually now went back to the new low for the year at 16,088. So sentiment in Hong Kong is pretty poor, and despite the Wall Street did not have any major move, you can see that the Hang Seng this morning is trading at a new year low. Okay, so sentiment is pretty poor, and obviously I'm not going to sell at this current level. I'm waiting for a more decent bounce, which has not been coming all this while. So for time being, I'm just going to give this market a white breath. Okay, meaning to say I'm not going to go near this this market for a time being. Over in Shanghai, we can see that the market has it open? No, it has not opened yet. So basically we have no update. This is yesterday's pullback. Yesterday's high was almost at 3,100. Market comes back down. Could be possibly doing a wave two. Okay, maybe a not with the, it could be doing a B wave. Okay, this could be an A B move, and then if it does, then we can see another rally potentially. We will have to see. Again, we have to see what Wall Street is doing. Up to date, we still have no update on these Chinese Q3 GDP reports because it coincides with the 20th CCP Congress, and they have taken the step of delaying the release of the GDP numbers. So we do not know how the Chinese economy has been doing in the last quarter. Market seems to think that it will be at least 3.4%, which is not ideal, but it's just a lot better than Q2 numbers if it's 3.4%. Again, we have to wait for the official number to be released. Over in the Nikkei, we can see this morning when the market opens, it opens with a gap down. Yesterday, we have a high of 27,371, not quite able to go beyond the 3,000 to 27,400 levels. That means the market is still in the corrective phase. If this is a larger three-wave a rally, then this pullback here may actually be within the internal structure, may be a little bit more complex, but overall we may be able to see 28,000 again at some point in the near future. Again, we have to watch out how Wall Street actually pans out. Okay, if the Wall Street actually stabilize and rally, then we may have another chance to see the 28,000 one more time before the market give way. Okay, over in the currency market, we saw that the dollar remains very firm. This morning we saw a challenge of 150. Market is very cautious about the 150 because it's a very round number, and there are some analysts are already speculating that perhaps the BOJ will come in to intervene. Personally, I don't think so. I think the more likely level will be 160 because 160 used to be the 1990 high, and that will be on the chart point that at least there is some reference point here. 150 is neither here nor there, although it's a very nice, very even round number, but I seriously, I do not think the BOJ will come in. To be truly effective in terms of currency intervention, you need a concerted effort by more than one central bank. Ideally, they get the Federal Reserve on board, and then if they come on board to intervene in the currency market, that will have the impact that the BOJ will is expecting. On a unilateral basis, when it last intervened last month from near 146 down, it only 149, the market actually only have a 24 hours drawdown before the market went back up again as if nothing has happened. So we already know on its own, the BOJ do not have the convincing power to convince the market that a top is in place. So we will have to watch this development, and until the dollar starts to pull back in a more significant way, the dollar is likely to maintain its current course. Although in other currencies, we can see that the sterling has actually rallied, okay, to 1.1440. Of course, this was not able to be sustained. We have a move up. Market is pulling back in a three wave, and there's a possibility it may drift all the way to 1.1150 before we can see whether it's going to go up or down. For a time being, like I said, the dollar doesn't seem to want to come down yet. So if that's the case, then of course the other major currencies will be biased to the downside, although the market has taken out a minor support line here on the 60 minutes. There is no indication that a top is in place. Okay, so again, I have some short position, light position at around current levels from a previous short position that I carried forward from last week. But by and large, this market does not give me the indication that it's about to give way all the way down to challenge the year low. Although the fundamental does suggest that over a longer period of time, all major currency is going to fall relative to the dollar. Okay. Over in the Aussie, over in the Euro dollars, we can see the market also pull back, also have broken a 60 minutes trend line here. But again, there is no indication that the market is going to fall all the way back to test the year low at 0.96. But again, this is a three-wave rally, meaning that if this is a three-wave rally, then this can only be seen as a corrective within a larger bearish trend. Okay, but again, this is just one simple three-wave move. Is it the end? Possibly. If the market tops out at 0.9875 as we have seen over this week, then of course the prospect for further downside is of course good. But again, I do have my suspicion, because when I look at the other fundamentals, for example, earlier on I did mention UK CPI numbers is back to 40 years high at 10.1%. What the Bank of England is going to do next, after the fiasco with the mini budget, I think the BOE, which is the Bank of England, is likely to come in with a very large rate hike. Okay, if that's the case, it will underpin the sterling versus the dollar rate. Okay, so if that is the case, depending on how big the rate hike is, it has to be much bigger than the 0.5 that they have been doing. So if you're talking about a big rate hike, which the BOE has actually been hinting to us over the last few days, then maybe we can be looking at maybe a 75 basis point rate hike. The next round, the BOE decides to hike rates. So that is the maybe the sentiment behind the recent relative strength of the sterling. Okay. So over in Aussie, we can see Aussie is also pulling back in a three-wave decline. It could be a little bit more complex because this move here originally I thought it's going to be a very simple three-wave rally to maybe 63.5 cents, but it doesn't seem to be the case. Maybe it's going to unfold in a little more complex pattern. We have to watch how this pattern pans out over the next few days to make a decision. But by and large, we can see that the Aussie market doesn't have enough strength compared to, let's say, the sterling or the euro for the time being, because they have just done their rate hike. The market doesn't seem to buy the fact that it is enough to hold the value of the Aussie dollars. Okay. Over in let's say crude oil continued to fall the day before. On Tuesday we have a low of $81.30, and the market yesterday have a slight rebound, but this rebound is very tentative. It is basically operating under the short-term resistance line. So we need to see a very big push above this resistance line to have any sense that the market has actually bottomed out at $81.30. Now this is a three-wave decline from the high of $93.64, and that gave me the confidence that maybe perhaps we have hit a key point at $81.30, and from here onwards we should see higher prices. But until we see some convincing evidence that of a very aggressive rally, I'm still going to keep my option open, although I have already long the crude oil price markets for more than a week now. Obviously I'm not making money, but I think over the longer term I am confident that higher prices is going to prevail. Okay. Over in gold market, we can see that there is no incentive for gold to rally because the dollar is so strong. When we look at dollar yen, we can already see that the dollar is highly unlikely to pull back anytime soon. So that being the case, precious metal is under a lot of pressure, and it doesn't seem to be able to rally. Last night, this morning low was $1,662.22. $1,624.20. So basically it may not have hit the bottom yet. If you look at the daily time frame, it does appear that we may be seeing much lower prices to perhaps $1,566. So it could be that bearish. Okay, but I think the level to watch for a time being immediately will be $1,614, because this was the low traded on September 28th. Okay, so we can see that the market right now it will be eyeing this level. If this level gives way, of course, then the next level to me will be 1,566. So that is a very long way down. Okay, so we do have to watch. The timing has to be just right for us to go in to buy gold. Over in the silver market, in the daily time frame, we also see that the market is again sliding again. So we are not seeing evidence that the market is about to rally. Again, the same fundamental that works for gold is also suppressing silver prices. The low traded this year is $17.55. Okay, so the market must hold at this level. If the market breaks this level, there's a possibility it will go down to $16.23. So this will be my projected target here, okay, over the medium term. Over in cryptocurrencies, we can see that cryptos are basically drifting. There is no real incentive yesterday, and the market is basically drifting. Okay, so over in the Bitcoin, you can see that the high traded was just under 20,000, and it does appear that this pullback from almost 20,000 is unfolding in a three-wave pattern. If this is the case, my immediate target will be about 18,740, 750 levels. Okay, so maybe there's a little bit more space for the market to dip, okay, before it can stabilize. And if and when it hit this 18,740 levels, we have to see whether it can stabilize. But basically, I think that will be an ideal level to pick up some long position, speculative long position, by placing a stop just below 18,180 and to exchange for the possibility of another rally back to 20,750. So that will be the short-term outlook for me if I had decided that if the price is good enough for me to go into take some tentative long position for a three-wave rally, okay, all the way to 20,750. Over in Ethereum, we also see something very similar unfolding. We see that the market is pulling back likely in the three-wave pattern, and it may even challenge $1,263.80. It may even break it slightly, and if that's the case, if the market can stabilize it, I think it is still good for another rally. Although the risk reward for this relative to the Bitcoin is a lot larger, because if I'm going to be long here, I must put my stop below $1,155. Okay, but that means to say that my risk reward is not as good looking compared to the Bitcoin, because my target is at $1,451. Okay, so that being the case, the risk reward is not perfect, not even 1:2. Okay, so maybe I will give this Ethereum some time to work itself out. Okay, over in the Ripple itself, we still have no news on the verdict of the court case between the SEC and Ripple Labs. Not sure why we are not getting updates, because most people were expecting some kind of verdict to be released on October the 18th. Now we are already in October 20th, although technically we are still in October 19th as far as the states is concerned. Okay, but again, there is no news, so the market has been drifting lower and lower. And this pullback here is again in a three-wave pattern. Is it going to be a good place to actually consider taking a long? I think the risk reward is beginning to look attractive to me. At the low this morning was 0.4473. If we can buy anywhere near this level, or anywhere near, let's say 45 cents, okay, I think it's still a very good risk reward, because if I'm going to go long here, I'm going to put my stop just below $43, 43 cents, okay, and exchange for the possibility of another rally beyond 51 cents to 52 cents, okay. So the risk reward here is actually looks very attractive to me from purely on a risk reward basis, okay. So if it ever come down to 45 cents again, maybe it will look attractive to me and I will take a look, okay. Over in the other coins, Cardano is recording an all-time low this morning at 34.771 cents, and it does not look good. Because it's a record low for this contract, for this coin, we have no idea to pinpoint a level in which it will stabilize. So it will have to work itself out, you know. It is unfolding in the pattern very different from the other coins, so there is no reference point here, okay. Solana again is giving back quite a bit of its recent gain, from the high of almost 32 cents, $32. Market is unfolding again in the three-wave pattern. Now that may give us a buying opportunity here. Okay, the market has actually hit its ideal level already. Anything under $29 is actually looking good, but again, we have to watch. Maybe there's another level. Okay, so basically the price right now is in between this this zone, in which I would consider it to be a very attractive buying zone for me. So because the risk is just below $27.75, if I go long anywhere within this bracket of prices from $28.25 to $28.94, I think this bracket offers me a very fantastic risk reward ratio for in exchange for the possibility of another rally. And if this is the case, I think there is a possibility, let's say assuming the low is already in place for this morning. If this is the case, I'm exchanging a possibility of another three-way rally starting from $27.75 to all the way to $32.63. So purely from the risk reward perspective, it looks very attractive, honestly. Okay, so any kind of short-term reversal signal on the lower time frame will be the cue to go back in on the long side again. Okay, remember to put a stop below $27.75 if you are going to take this view. Okay, over at Binance Coin, we can see the market is basically very, very stable, although we has pulled back from the $276.70 since the high was registered on October last Friday, market appears to be unfolding in a three-way. So if this is the case, this bracket of prices between $266.70 to $269, I think this bracket of prices looks attractive. This morning we have a low traded just above the boundary here at $269. Okay, so if another dip into this space here will actually confer a much better entry price. But although from the risk reward ratio point, this risk reward may not be that fantastic. Okay, so maybe I will just give this coin sometimes to work itself out. I'm not going to take any kind of views for this coin. Okay, over in Cosmos, we can see the market has unfolded in a three-wave, and the market did not quite hit its ideal level, because the ideal level is at $13.20. Market hit a high of $12.76 and then started to pull back. And then, of course, immediately the most recent low here, if we based on this rally from $10.53 to $12.27, the 50% pullback level, which is this blue horizontal line here, actually may offer some kind of technical support. We have to see whether the market can hold that. Okay. Over the other coin, let's say Ethereum Classic, it's also pulling back to the ideal level because the market is having a three-way pullback. The ideal level is $22.13. The market went down to as low as $22.10. So this could be actually offer some kind of support here, but for time being, there is no confirmation that we are going to see that this level can hold. But again, it is a technically almost perfect three-way pullback zone. So this is actually a level worth watching. Again, I do expect some buying pressure to come, buying interest to come back in, because there's no catalyst. We cannot get it from the equity side. We can't get it from anywhere because there is no new major economic release from the states for the balance of this week. With the only one that the market is only focused on for the time being will be the FOMC meeting on November the 1st and 2nd. On the 2nd itself, we will expect the Federal Reserve to come in with a major rate hike. So that will be the one the market will be focused on from now until then. Okay, for the next 2 weeks, highly the market is going to drift sideways with very little incentive to go either way. In a very decisive manner, unless there is new stimulus news that come in, whether something happened in the war front in Ukraine or something else major happened. If based on the economic release, I think that's about it for this month. Market is going to drift. Okay, but do watch out, because I think the problem for me is that the credit market is so stressed and it continues to be stressed. Okay, and my worry is that the next crisis is likely to come from the credit side of this global marketplace. Okay, if the stress in the credit market resulted in bond prices collapsing, it will have a knock-on effect for the other asset classes. And if bond prices do unravel in a big way, and there is no central bank intervention, okay, then you have a choice. As an investor, you have a choice. Okay, we have been seeing global capital flow from countries and nations that saw the currency been depreciating. They have moved the capital to the states. So once this capital they have reached the states, they are not going to lie idly in checking accounts. They are likely to be moved into risky assets. So if in the event of an unraveling or an implosion in the bond market, there is the risk that this fund that has already moved to the States may decide to go into equity markets. So do watch out for the possibility, although right now it doesn't seem even probable, but there is that choice, because fund managers need to perform. Okay, so they may have to reinitiate position again for the portfolio going into next year. Okay, so this is as good a time to repopulate their portfolio, and they may decide that this is a time to seek shelter in equity markets if the bond market actually implodes. So this is the one thing that you want to watch. Okay, do watch out for this news coming in from the credit market. Any kind of stress that will result in yields climbing aggressively will cause further stress to the credit market, which in turn will have a disastrous effect on bond markets, which in turn will spill over to the other asset classes. So we're going to see a lot of things moving if and when the credit market actually implodes. To watch out. Okay, until then, I'll see you tomorrow. Bye-bye.